MKS Inc., trading under the ticker symbol MKSI on the NASDAQ, is currently sitting at a live price of $164.19, reflecting an intraday climb of 0.48% as of this very moment on December 27, 2025. This slight upward nudge might look like standard market noise at first glance, but there is a specific tension building here that many people are missing. While the broader market is obsessed with the flashy chip makers like Nvidia stock or the consumer giants like Apple stock, a massive shift is happening in the underlying infrastructure that actually makes those chips possible. Most investors see MKS Instruments as a second-tier semiconductor equipment player, but the reality is that the company has quietly positioned itself as the gatekeeper of advanced packaging. As we move into 2026, the bottleneck for high-performance computing is no longer just about shrinking the transistors, it's about how you stack them and keep them cool. MKS owns the vacuum, power, and photonics technologies that are essential for this next phase of hardware development. If you are using a platform like Robinhood or SoFi Invest to track your portfolio, you might have noticed MKSI hovering near its 52-week highs, yet the general sentiment remains cautious because of the high debt levels left over from their massive acquisition of Atotech. This creates a fascinating curiosity loop. Is the market underestimating a company that holds the literal keys to the AI hardware kingdom simply because its balance sheet looks a bit messy on a surface-level scan? The common expectation among the retail crowd on investing sites is that MKS is a cyclical play on the memory market, specifically 3D NAND. When memory prices are up, MKS does well. When they are down, the stock drags. However, the deeper reality is that their material solutions and photonics divisions are decoupling from that old cycle. They are seeing a surge in demand for chemistry and laser solutions used in high-density interconnects. While many are busy self-investing in the same 5 tech names, the institutional activity suggests a much more sophisticated accumulation strategy is at play here. Large-scale wealth management firms and those managing Fidelity Investments are looking at the 10.3% year-over-year revenue growth reported in the most recent quarter as a signal that the floor has been established. Even with the headwinds of tariffs and geopolitical uncertainty, the company managed to beat earnings expectations by over 7% in November. This disconnect between the cyclical laggard narrative and the infrastructure leader reality is exactly where the smart money is finding value. When you look at the recent stock movement, we have seen MKSI gain ground for 5 consecutive sessions leading into this late December period. The trading volume has been remarkably steady, which indicates that this is not just a speculative spike, but a genuine repositioning by big players. If you pull up the charts on the Fidelity mobile app or the Interactive Brokers trading platform, you'll see a clear breakout above the $150 resistance level that had held the stock back for much of the year. This breakout was fueled by the third quarter report, where the company posted an EPS of $1.93, soundly beating the $1.80 estimate. More importantly, their guidance for the upcoming quarter suggests a range that could go as high as $2.61 per share. This kind of upward revision is rare for a company that is supposedly stuck in a slow growth sector. It tells us that the operational efficiencies the management team has been talking about are finally manifesting in the bottom line. Comment below how many shares of MKS Inc. you currently hold, or if you are planning to add it to your individual brokerage account before the next earnings cycle in February. To understand why this move matters, we have to look at what MKS actually does. They operate through 3 primary segments: vacuum solutions, photonics solutions, and material solutions. The vacuum division is the heavy lifter, providing the precise pressure and flow control needed for semiconductor fabrication. If you don't have perfect vacuum conditions, you can't make a modern chip. But the real growth engine right now is the materials solutions side. This came from the Atotech deal, which brought in world-class expertise in plating and finishing for printed circuit boards. As AI servers require more layers and more complex electrical paths, the chemistry provided by MKS becomes a non-negotiable requirement. They're also a leader in laser-based drilling for flexible circuits. Think about the components inside the latest smartphones or even the sensors in a Tesla stock vehicle. Almost all of them rely on the precision drilling and chemical plating that MKS specializes in. This isn't just about selling a machine and walking away, it's about a recurring revenue model where they sell the specialized chemicals and services that keep those machines running 24/7. Looking at the broader macroeconomic picture, the pressure of high interest rates has been a weight on the company's shoulders because of its $4 billion debt load. However, they've been aggressive in paying that down, making a voluntary $100 million prepayment just this past October. This is a clear signal to the market that they are prioritizing balance sheet health. When you use an online investing tool like Schwab Intelligent Portfolios or a robo-advisor through SoFi Invest, these fundamental improvements often take time to be reflected in the automated ratings. But for those doing the work manually on an interactive broker's platform, the trend is undeniable. The debt-to-equity ratio is high at 1.64, but the cash flow from operations is also rising, hitting $197 million in the last quarter alone. This gives them the liquidity to navigate a rocky economy while still investing over $250 million a year into research and development. They aren't just sitting still, they are defending their 2,200 patents and ensuring they stay ahead of the competition in Singapore and China. The future outlook for MKS hinges on two main catalysts: the recovery of the global wafer fab equipment market and the continued integration of their chemistry and equipment businesses. Analysts at firms like KeyBank and Mizuho have been raising their price targets, with some looking as high as $180 or even $200 per share. The expectation is that 2026 will be a record year for semiconductor equipment spending, potentially reaching $138 billion globally. MKS is positioned to capture a massive slice of that pie because they are integrated into almost every step of the manufacturing process, from deposition and etch to cleaning and packaging. If the reality of the 2N chip transition meets the current hype, MKS could see a multi-year tailwind that the market is only just beginning to price in. The risk, of course, is that a global slowdown could dampen demand for consumer electronics, but the enterprise-level push for AI infrastructure provides a much sturdier floor than we have seen in previous cycles. One thing that makes MKS stand out on investing sites and brokerage apps is the sheer level of institutional ownership. Nearly 100% of the float is held by hedge funds and large institutions, which means that when the stock moves, it moves with conviction. We have seen some minor insider selling recently, with a few directors offloading small chunks of shares, but this is often just routine tax planning rather than a lack of confidence. The core thesis remains intact. MKS is the silent partner to the entire tech industry. Whether you are bullish on the latest breakthroughs in photonics or the expansion of 5G and 6G networks, you are essentially making a bet on the equipment that builds that reality. By maintaining a serious, professional approach to your self-investing, you can see that MKSI offers a level of depth that many of the high-flying momentum stocks lack. As we look toward the final week of the year, the stock is showing incredible resilience. It is staying well above its moving averages and the MACD signals, while some short-term divergence still point to a strong underlying trend. If you are looking for investment help or trying to find the best investing sites for deep research, always remember to look at the hidden names that provide the raw materials for the headlines. MKS Inc. fits that description perfectly. It is a company that has moved from being a simple component supplier to a comprehensive solutions provider. The integration of Atotech was a bold move that many doubted, but the recent earnings beats are starting to prove the skeptics wrong. The expectation of a messy, debt-heavy integration is being replaced by the reality of a diversified, high-margin powerhouse. In closing, MKS Instruments is a prime example of why you have to look past the surface-level metrics. The live price of $164.19 is a reflection of a company in transition. We started with the expectation that this was a volatile, cyclical, semi-cap stock, but the deeper analysis reveals a leader in advanced packaging and photonics, with a strengthening balance sheet and a clear path to dominating the AI hardware infrastructure. Institutional investors are already on board, and the technical breakout suggests that the wider market is finally catching on. Whether you are using Fidelity Wealth Management Services or managing your own individual brokerage account on a Robinhood trading platform, MKSI is a name that demands your attention as we head into